All right, thank you so much for staying with us. And after an extensive meeting between members of the Presidential Tax Committee and the Nigerian Governors Forum last week, Thursday, the governors gave their nod and, of course, had some proposals. Take a listen.
The Forum reiterated its strong support for the comprehensive reform of Nigeria's archaic tax laws. Members acknowledged the importance of modernizing the tax system to enhance fiscal stability and align it with global best practices.
Two, the Forum includes a defined value-added tax slab sharing formula to ensure equitable distribution of resources as follows: 50% based on equality, 30% based on derivation, and 20% based on population.
Number three, members also agree that there should be no increase in VAT rate from 7.5% currently, or reduction in corporate income tax from the current 30% at this time to maintain economic stability.
All right, with me in the studio is Managing Consultant Kreston Pedabo. Mr. Albert Folorunsho is also a member of the Presidential Committee on Fiscal Policy and Tax Reforms. That had that meeting on Thursday with the Governors Forum. Thank you so much. It's good to have you live in the studio.
Thank you, Tolu. Very interesting studio.
Thank you.
And,
Thank you.
Just to say that, I mean, as a member of the committee, I'll be speaking my opinion here, not the committee's.
Okay, that's
I'm not representing
good.
the committee.
Okay, good. But at least after a series of consultations,
yes,
you know, back and forth and all of that, finally the Governors Forum gave their nod to this. As a member of this committee, just like you said, your own views, tell us more about the outcome of that meeting and what you saw there.
Well, it was an interesting outcome and one that we have waited for long. You know, there have been complaints as to whether we have done extensive and enough consultation. And the fact that also the president insisted that more consultation has to take place. So having that session with the governors was very important and was a very big step, you know, forward to signing these bills into law. And so their position, yes, very significant because they are a major stakeholder, and all that has to be done now is for the lawmakers to proceed in the process of lawmaking. We expect that where second reading has not been done, it will be done now. And thereafter, there will be public hearing where the position of the governors will be presented and will be considered by the lawmakers. And thereafter, they can move to committee level and, of course, hoping that the bill will be passed before the end of the first quarter.
Yeah, I even saw Mr. Idere posting that he expects it to be passed in March, according to him. I saw that tweet today or something. But the bone of contention, which has been the sharing formula for VAT, yeah. I've had that conversation. I even had a tax, someone from PwC on Friday. We looked at it again, and now stands at 50% based on equities, 30% based on derivation, and 20% based on population. Yes. Can you make us understand this better?
Okay, so the existing law, because there has been complaint as to what is the responsibility of the committee in even delving into sharing
VAT,
formula.
Yeah.
But of course, you know that the existing law has a provision for this sharing. And so if it is not taken care of in the new bill, then there will be a gap. Because and therefore, we have to make that provision. So we had proposed 60% derivation, 20% population,
okay,
and then 30%, I mean, and 20% equality.
Okay.
Okay, but of course, you know the type of controversy that has generated, and the governors in their wisdom have considered all of that and said that they will propose 30% derivation, 20% population, and 50% equality. So what it means is that whatever is collected into the tax pool, 50% of that will be shared equally among the state and local government.
Okay.
Among the state and local government.
Okay. Okay.
And then 30% will be based on derivation, which I will speak to later, and then 20% will be shared on the basis of the population of the local government and the state, whatever is collected in the tax pool. So when you talk about derivation, I think we have already I've explained that on this platform before, which means that the tax is attributed to where the consumption or the payer of the VAT is resident. Okay, so that's what we mean by attribution. And the provision of the law has also stated that whoever is filing VAT return as a company, you must attach a list to specify the location where this VAT has been consumed. Okay, so the old provision where VAT is attributed to where it is the headquarters or companies filing the returns are located no longer apply. As soon as this law is passed, as soon as the bill is passed into law, it will be based on the place of consumption or the place where the person paying for the service is resident. Which means if I'm resident in Kano and I'm consuming any service or consuming any goods, the VAT element of whatever I'm consuming will be attributed to Kano, no longer where the company that is selling those goods or rendering that service is situated. And that is the essence of derivation. And we expect that derivation will be full derivation now, which is just 30% of it, we must remember.
Yes, 30.
The 50% will be shared equally. There's no controversy around that. 20% will be based on population. Only 30% is to be based on attribution. And there are enough provision in the law that spell out how that attribution will be done, because that has been the main controversy as to how do you know how much goods is consumed in different states. It can be done, and the law already made provision for it in Section 77.
Yeah, that's interesting. The members also agree that there should be no increase in VAT, CIT to maintain economic stability. For me, I'm looking at the fact that government is looking for revenue to fund the budget. How sustainable is also this decision?
Well, that's a major decision, and which they have taken and which government is ready to shoulder because the impact is huge. The current rate is 7.5%.
Yes.
Right? And we had proposed an increase to in the first year, 10%, subsequently to 12.5%, and then 15% later. But of course, the governor has suggested, remember, all they're saying is just suggestion, which will still be considered by the National Assembly, and if they agree, they will pass it into law. So the 7.5% we have now, if it is remained, and then all of the proposals were put in the law, which is the fact that taxpayers will now be eligible to take deduction for their input VAT. Input VAT is categorized into three. Input on goods you have acquired for the purpose of reselling or for the manufacture of goods for resale. That is the one that is allowed as a deduction under the existing law. Okay? And then we now have input VAT on fixed assets or asset that you use in your business, like this is your office now, you have acquired this place, this new station, this new studio, okay, and you will have paid VAT in the course of the acquisition. What we are proposing is that input VAT, that VAT you have spent should be claimable from your output VAT. Okay. Again, you have overhead and other expenses that you will have incurred in the course of generating your income, okay? The new reform is to the extent that you are also eligible to take a deduction. Before now, the only one that is deductible is the first one, which is on goods purchased for resale and goods for the manufacturing of goods for sale. Okay, the old provision, the existing provision says that when you incur input VAT or VAT on asset, it should be capitalized. in line with IFRS provision. As long, I mean, if you are not going to take a deduction, you can capitalize. The same thing with expenses and overhead. If you are not going to take a deduction for it, you can expense. But with the reform, it means that you can now take a deduction. And since you can take a deduction, you are not eligible to capitalize them as your asset. If you are going to take a deduction on the overhead, you cannot deduct them as expense. But which is better for the taxpayer, which is the real VAT system, where you are allowed to take deduction for every VAT you have suffered, as which we call the input VAT from your output VAT. So it's going to take a hit on whatever is available by way of VAT revenue. I mean, there's no doubt about that. But of course, the governor also looked at that and said that you have also proposed a reduction in company income tax rate.
Yes.
From 30% to 25% in the first instance, and then to 27%. I mean 27% in the first instance, and then to 25% subsequently. But they have said, since they look at the economy and believe that whatever way you look at it is going to, compound the existing inflation that we have, which is over 34% as we speak. And therefore, they are not going to support any increase in VAT rate. And that if we are not increasing any VAT rate, then in order to reduce the level of loss of revenue, there shouldn't be any increase in company income tax rate. And so that they're saying that the company income tax rate should remain 30%, even though we know internationally and our neighboring countries, corporate tax rates is reducing. Most of them are around 20%, 19%, and so on. So our own is considered very huge at 30%. And we believe that that should actually come down. But I'm sure the National Assembly will look at both suggestions from us and from the governors, and then we believe they will take the most convenience decision that will affect the generality of Nigerians.
Indeed. Now, in all of this, what more do you think Nigerians need to know? Because even earlier today, I had a conversation in the newsroom, and we're already talking about small businesses, how this will impact them. For people earning minimum wage, 70,000 naira minimum wage, how will all of this affect them? People want to know how this tax thing affects them, because clearly there are some fears. When the people hear tax, they are always scared. So what more do you think Nigerians need to know? Small business owners and little salary earners.
All right. There are several provisions in the law. The president even mentioned it, that this law is that 25 million is taken as the threshold for small businesses, and they are not liable to tax on 25 million. They are also not eligible to, they are not required to file VAT returns. If you deal with them, you will self-charge yourself the VAT. And so we are proposing an increase in that threshold to 50 million for small businesses. Any company that qualifies as a small business is completely exempted from payment of income tax. And that threshold now has increased to 50 million in view of the inflation. We have also exempted the small businesses from the development levy. Remember, the governors also said that the development levy of 4%, which we proposed to replace the marked taxes of education tax, NASENI tax, and information technology tax.
Yes.
All of that is now 4%. In fact, we had put a sunset where they will gradually disappear, but the governors believe that and suggested, which we are not against, that sunset should be excluded, which means that going forward, the 4% will be appropriated into 50% for education tax, then 25% for student loan, and then 20% will go to Nigeria Information Technology Development Fund, while the last one, 5% will go to the National Agency for Science and Engineering Infrastructure, NASENI. Okay, and that will remain, going forward. There is no sunset provision in that. So, but I mean, going back to the small businesses, yes, they will not be liable to that levy. Small businesses are also excluded from filing VAT returns and all that. And of course, we know that before now, small businesses were required to file returns of their audited financial statement, which means you need an auditor. Okay, so what we are putting the provision, what is in the law, is the fact that you can actually file your statement of account without having an auditor to audit it, which will reduce the cost. Again, if you look at the personal income tax law, some states complain, but I think the governors also accept the fact that the existing provision says that minimum wage earners are exempted from tax.
Yes.
Okay, and so we have put a provision that excludes those who are earning 800,000 naira per annum and below.
Okay.
Okay, so minimum wage on average is about 70,000, and that will give you about 840,000. Okay, so which means, yeah, so that provision has been included now, such that the same existing provision that excludes minimum wage earners is still in the law, which means if you earn below 800,000 and below, you are also exempted from personal income tax. And of course, as a company, as a taxpayer, if your annual income is less than 20 million, you will pay less tax as we based on the tax table of rate that we have. It is only those high income earners that are liable to pay higher taxes, the high net worth individuals. Okay?
So I want to take us back again to this, to the VAT thing, which you explained earlier, you know, the other time. So now that we are back on all platforms, now I want to take us through that again very briefly. The 50%, 30%, and 20% based on population, equality, and all of that. I want us to take that.
Okay, so the proposal by the governors, which is the one we are running with now, is the fact that 50% of the VAT pool
generated
from all sources into the pool, the VAT pool, will be shared equally, which means regardless of whether you are Lagos, Kaduna, Kano, that 50% is to be shared equally among all the states and local government. All right? Then 20% of the pool is to be shared on the basis of the population of the local government and the state. Okay, so that is tied to population. The remaining 30% is the one that is contentious, which is it will be based on derivation. And like I said again, when you talk about derivation, it means that there needs to be attribution of where the VAT has been generated. All right, which means who has paid for the VAT, which state is the person resident. Okay, then we'll accumulate for each of the states and ascertain how much VAT has been generated by each state. And that will be the basis for sharing 30% of the VAT pool. Okay, and that includes imported VAT you pay at the point of import. I'm sure that will also form part of the proper derivation that has been referred to with this reform. And another thing I raised around the VAT rate remaining at 7.5% is the fact that it's definitely going to reduce how much is being generated from VAT. Okay, VAT will be, yes, because before now, the VAT that is payable is VAT you have generated less the input VAT relating to the goods purchased for resale or used for the manufacturing of goods for resale. But with the new provision, with the new reform, you are eligible to deduct all your input VAT on your fixed assets and on your overhead expenses. And that is going to reduce further what is available for sharing. But of course, like I said, it was one of the governors raised that issue and it was carried, which means that on that basis, then there shouldn't be a reduction in the company income tax rate, even though we believe, I believe that reduction should have been considered because worldwide, the corporate tax rate, transaction taxes are the ones being increased while corporate tax are being reduced. So we expect that corporate tax should have been reduced. But of course, we expect that National Assembly will consider that.
All right, before we wrap this up now, finally, if this is passed to law, I'm looking at the outlook for our tax system when this is eventually passed into law. Can you help us identify some basic changes that we will see moving forward?
All right, there are quite a number of changes. Remember, we have 4 bills.
Yes, 4 of them.
One for the tax bill, the tax admin bill, the joint revenue bill, and of course, the National Revenue Establishment Bill. So there are quite a number of things that are in the bill. First, we are going to have a more friendly tax law that is easy to understand and less complex. A more efficient tax system is what we hope to see. Digitization, automation of tax administration will make the compliance easier. and widen the tax net as well. Of course, one of the bills also introduced the tax ombuds, which will improve dispute resolution between the tax administrators and the tax authority and the taxpayer. Companies will no longer have to pay tax on their capital. The minimum tax has been removed for companies, even though there's a provision under the Pillar 2 that you now have the global provision for multinationals that you need to pay at least 15% of your profit. But of course, it's only when you make profit, so you're not paying it on your capital. That provision is to be introduced where you pay 15% effective rate on your profit. And that same provision on multinationals will also apply to Nigerian companies that have a turnover of not less than 20 billion in a year.
Okay.
We expect that you have a minimum effective rate of 15%. Business owners also, you don't have to worry about how you set up your company, either as individual or as corporate, because as far as CGT is concerned, you will not be paying the same rate. The applicable corporate tax rate will also apply to company income tax as well as corporate tax. Then there is the exemption of investment in shares, okay? That remains, but that has not been increased. Before your gain on sale of share will be liable to tax. Now, you must have disposed not less than 150 million, okay, in terms of proceed, and the gain must be above 10 million in any 12 calendar year. Other provisions in the law include now where you have debt forgiveness, it is taken as chargeable to tax. We have less complex capital allowance computation. We just have straightforward annual allowance. We don't have investment allowance, no balancing allowance, no initial allowance as well. The restriction, this is also very critical, the restriction of deduction of interest on intercompany has now been restricted to only the intercompany loan, okay? Unlike what we had in the old provision or in the existing provision yeah, that tie it to all your loan facility, including from commercial bank. That has now been restricted to only intercompany loans. And of course, has been emphasized, more items are now exempt and zero-rated under the VAT, particularly all the basic items relating to food, education, health, transportation. They are all zero-rated, which means if in the course of your business you incur any input VAT, you are eligible to claim refund without any serious audit. Of course, we also have capital allowance claim by companies that are enjoying tax holiday are no longer what we used to have. It means that you will enjoy your capital allowance even during the tax holiday. And thereafter, if you still have any, that will also be taken as a deduction. So pioneer status incentive, is to be replaced by the economic development tax incentive, okay? And companies enjoying this incentive will compute and file tax returns like any other company, but they will be issued tax credit by government for payment of tax due, in the course of the operation. Quite a number of things that are included in the law.
We have a commercial break. Yes, I'm still going to allow us wrap this up after that commercial break so that we will still share your thoughts. Mr. Albert will still be here. Let's take this commercial break and we'll be back to continue this important conversation. Don't go away.
But why? No, see, say this big bull bag of rice no get the new big bull holographic seal. Not true.
Introducing the Big Bull Holographic Seal Tape, your favorite authentic Big Bull rice, 50 kg and 25 kg. Now with holographic seal tape. This is to ensure you get the premium product from Big Bull Rice. Do not buy if the holographic seal tape is not on the bag or is broken. Big Bull Rice. Tasty rice nourished you.
The world needs mums. With a splash of golden terra oil, a mum can transform a frown into a smile. Change no thanks into yes please. Resolve family feuds without blowing a whistle. Providing tasty family meals is all that matters. Where there are moms, there is love. Golden Terra Oil, for pure love.
And I also wanted Andrew to...
We're glad to have you back. This is Business Nigeria, live from our studios in Victoria Island. Mr. Albert Folorunsho is a member of the Presidential Committee on Fiscal Policy and Tax Reforms, and also the Managing Consultant Kreston Pedabo, speaking to us about the outcome of that meeting last week with the Nigerian Governors Forum. What next, Mr. Folorunsho, after this move?
All right, like I already said, the bill is ready. It has been passed by the President to the National Assembly, and is supposed to undergo the normal law passing process. Okay, the first reading for the two houses has taken place, both at the Senate and the House of Rep, and I think it has also gone through second reading in the Senate. We expect that to also happen at the House of Rep, and thereafter we expect a public hearing. Okay, and of course the governors have given the nod, their own nod, and they have made their own submission with the issuance of the communique, specifically around the sharing formula, which they have projected or suggested 50% equality, 30% derivation, and 20% on the basis of population. Fine. And then again, they have said that there won't be any need for increase in VAT at this time from 7.5%. Which we don't quarrel with.
That will hit on inflation
because if you do that, yes, there will be inflation. But of course, we have also pointed out the fact that it will also impact on the VAT revenue generation, which has allowed them to say that there shouldn't be increase in, there shouldn't be reduction in the corporate tax rate. So immediately after the public hearing, where all of this will be presented by those who still have interest in making suggestion and presentation, we will expect that it will now go into the specific committee in the Senate and the House of Rep, where all of those will be considered, and the revised bill will be presented to the whole House through the third hearing, and thereafter will be harmonized, and we expect that will be sent to the, after harmonization and passing into law, it will be sent to the President for assent. Like you said, our chairman said, we're also very hopeful that within the first quarter, by end of March, this bill will become law. And of course, if it becomes law by end of March, we expect, as provided in the Nigerian National Tax Policy, that the taxpayers and general public will still be given at least 3 months to be able to familiarize with the provision before it can take effect. And of course, when it take effect, we expect that only the transaction taxes, the VAT, the stamp duties, the withholding tax provisions, and all that will take immediate effect. And then there will be phased implementation regarding corporate tax, as may be advised by the federal, by the Nigerian Revenue Service. That will be the name.
Okay, that will be the name at that time.
That's
and true.
And then engagement will continue. There will be implementation guidelines here and there, and public enlightenment.
I must thank you so much, really, for this. I will call it, we've really been educated, and I'm sure our viewers have also been educated, understanding more about this reforms that the president has harped on, that there is no going back. Thank you so much, Mr. Albert Folorunsho, Managing Consultant Kreston Pedabo, and also Member Presidential Committee on Fiscal Reform and Tax Policy. Do enjoy the rest of your day.
Thank you very much, and congratulations again for this very nice studio.
All right, then. That's our show today. The market is up 0.02%. That's starting the week positively. But of course, as usual, we'll bring you up to speed with all of the figures and trading patterns on Business Nigeria as usual. Enjoy the rest of your day. Stay safe. Get the cash. I'll see you tomorrow.